Welcome back. The SGX Nifty is indicating that we'll have some kind of a gap up. Now, keep in mind the Nifty futures trading at a discount. So, but as of now, about 70-point gap up is what's indicated by the SGX Nifty. Deepan Mehta is joining us from Elixir Equities. Deepan, good morning. I wanted your thoughts first on Tata Steel. You must have looked at the numbers. What's your view on the stock now?
Given the way the steel prices have moved and the stoppage of production was certainly going to impact the performance. And with this particular lockdown and global pandemic, any resolution to the European steel business seems to be distant at this point of time. So although the stock is available at perhaps half its book value, I think investors, at least long-term investors, should look at exiting the stock at every rise. There's not much value to be created going forward. And maybe, because of this Chinese export of steel, you may find domestic steel doing well over the next 2-3 quarters, but that would be a perfect exit opportunity whenever the company comes out with a good set of numbers. And in my opinion, I think this is not the time to buy commodity stocks, be it steel, aluminium. Investors should still get focused on more of the stocks which offer a slightly safe haven and not impacted as much by the current lockdown and pandemic.
To your point, Deepan, everything that we thought is a 1 or 2 week affair is now turning out to be a 4-month affair, the pandemic. The China issue, China imports controls, we thought would be a 1 or 2 day affair because of narcotics or something. It's now turning out to be long drawn, and maybe it will be national policy for the next many years to build walls around Indian industry. We don't know. But actually, just hold on. I want your thoughts on this China spat and the stocks that will be impacted. But my colleague Tim C has just flashed in some positive news on that issue. It looks like some consignments that are stuck are getting cleared. Tim C, tell us, what did you pick up?
Well, yes, there is some positive news. There is some movement on that side because we must see that India has a very robust electronic manufacturing policy. India has been pushing Make in India electronics for all the world. India has been pushing that in the budget also. We saw this. And now when we saw the entire import curbs coming in where Chinese imports were held at various ports, a lot of representations went. HP, Dell, Cisco, Samsung, Apple. Some consignments of these companies are getting cleared. What I was told by sources that last evening at Chennai, both sea and air cargo movement did happen for these companies. Already we were reporting that in Delhi some movement was happening, but Samsung was held. But now even in Delhi also Samsung was getting cleared. So that's in some good news. Let's see whether more relaxations for other companies, other sectors are coming or not.
Got it. Thanks a lot, Tim C. Even that much is welcome. And now to you, Deepan. This doesn't look like a temporary needling. It looks like it may evolve into a policy of keeping some imports out, even at the cost of being hurt, because this is now being turned into a semi-defense policy. Your thoughts, what stocks would you go to? How are you approaching it as an investor?
See, as an investor, I think it's basically a problem for a whole host of sectors. And even sectors, service sectors like banking and IT may eventually get impacted because a lot of the hardware does come from China. So I think it affects the entire economy. And my sense is that I think these physical, curbs may not last very long. Eventually, I think they'll start increasing the tariffs on Chinese imports and give some lag time to Indian industry to get backward linkages in place and alternative supplies. Global supply chains are very complex, and if you try and put some stoppage as we have so quickly without giving any lead time, it's going to affect production. And production is something which the government is focusing on right now, trying to get the economy going also. So at some point of time, I think pressure from the industry will lead to easing of all these physical restrictions. But in the medium to long term, let's be prepared for higher tariffs on Chinese imports and maybe some of the other imports coming into the country as the government takes the self-sufficiency motto to its next level. So there would be some changes in the way companies operate. But by and large, I think Make in India benefits a lot of large companies which have the capital to invest in backward integration, and which also have the patience and the wherewithal to grow the export market. So in the longer run, I think it will certainly benefit Indian industry, but I don't think that there are any specific winners or losers on account of this particular policy, as of now at least.
Okay, and also the important thing is for the Indian manufacturers to have proper infrastructure and supply chain in order to increase localization. So they've tried to do that, but on many aspects, we still fall short. Dipan, good morning. Thanks for joining us. I wanted your thoughts on the two biggest gainers this month, Bajaj Finance and Bajaj Finserv. Both stocks up about 35 to 50% in June. Do you think that this rally is sustainable, and what is your advice here?
I don't think it's sustainable. I think that these stocks have gone into deep discount, and it saw a lot of deep value long-term investors buying into these companies, which are great businesses. And we have seen that a lot of the lost ground has got covered. But at this point of time, I think the risk return is pretty much balanced. And still, we don't have a handle on the NPAs and the growth numbers going forward. And as I remember, Bajaj Finance in its last con call was accounting for normalcy sometime in July or thereabout, but all those assumptions are getting postponed. So I would review Bajaj Finance slightly negatively at this point of time, although as a measure of disclosure, we and our clients are invested in the company. But the longer this lockdown and this coronavirus spread remains, the more a company like Bajaj Finance is going to get impacted. So I would be a bit cautious over there. As far as Bajaj Finserv is concerned, not that optimistic on the insurance business as of now. A great deal of volatility in their earnings because of a lot of variables, especially the investment book which both these companies holds on the insurance business per se. And there are going to be some delays in terms of insurance premiums. And it's a bit of a confusing area as far as such companies are concerned, especially given that they don't have a strong banking partner. So again, I think between the two companies, we are more negative on Bajaj Finserv than Bajaj Finance. But even Bajaj Finance at its present valuation, one needs to be a bit cautious because assumptions which the company made about when they would get back to normalcy are getting pushed by 2-3 months or so.
Yes, after all, we are dealing with uncertain terrain as far as the economy is concerned. But Dipan, just stay on. We are going to parse that India-China issue a little more. A large part of Indian manufacturing is connected to automobiles. And so we have invited Mr. Rajan Vadera of the SIAM, the Society for Indian Automobile Makers, to tell us how things have changed or not changed on the ground. Good morning, Mr. Vadera. Kind of you to join us this early. Really, that's the question. Have you all made representations compared to last Monday when we first heard this stoppage of consignments or slowdown in consignment clearance, and today, Tuesday? Have you noticed any difference in the last 8 days?
Well,